Today, we're going to go through some live mortgage rates and then do a deep dive into manufactured home loans. We will wait just a couple minutes here to get started. Let us go live on all the different platforms and give everybody a chance to tune in. We put the chat up on the screen in the meantime, so feel free to drop a comment there in the chat as you tune in. And we'll get started here in just a moment. But thank you, everybody, tuning in nice and early. See some comments were already coming in there. Appreciate that. Great topic here for today. A lot of people may have some misconceptions or misunderstandings about manufactured homes, so it's going to be a great topic to go over here today. So it looks like we are live on all the different platforms, so we can get started. As you tune in, keep dropping comments there in the chat to let us know, and feel free to drop comments as well. If you have questions, go ahead and ask those in the chat as we go through our presentation. So welcome, everyone. My name is Kyle Hershey. I'm the COO of The Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. What we do every morning on this show at 11 a.m. Eastern time is go through some different live mortgage rates for the day, and then we do a deep dive into a different topic every day. Today's topic is going to be manufactured home loans. So something that a lot of people may have some misconceptions about. Hopefully we'll clear some of that stuff up. Our sales manager, Jose Gonzalez, with 28 years of experience, will do a deep dive into manufactured home loans for us here shortly. But before we do that, we'll do what we do every morning, which is pull up our pricing tool and go over some live mortgage rates for today. So Nick, if you're ready, let's go ahead and pull up our pricing tool and we'll see what the market is looking like this morning.
All right, let me switch my screen and we will check it out. So this is our pricing tool for our team of mortgage professionals. This will show us the rates and the APR for today. Is October 5th, just after 11 a.m. Eastern. So all our general programs are live. And if you'd like a full breakdown of all the fees that go into the APR, a full loan estimate with all the itemized fees, please get with our team. We have over 400 licensed loan officers in 24 states for primary homes, and we can do our business purpose DSCR loans we love to do in 44 states total. So to compare against the programs, we'll set up the same scenario so we can compare APR across the different programs here. We'll set up a $400,000 loan amount. We'll set up an 80 LTV, 20% down payment. And today I'm going to switch it up a little bit. I'm going to show the lowest rates we can do here. So I'm going to put in the lowest legitimate charge. The highest legitimate charge we can have for the lowest rate here, 97.5. Means the computer will find the lowest cost we can offer at the moment. The programs we'll compare, we'll start with conforming conventional. Then we'll check out FHA, which is usually the next best option. And then we have over 5,000 additional options under expanded guidelines, which we'll check out next. We also have VA and USDA. VA is only for eligible vets and active service members. If you are eligible, let us know. We can quote it in a couple clicks. And same with USDA. We can quote it no problem if you are shopping in one of those USDA eligible areas. So we'll start today with conforming conventional. We'll do purchase, 30-year fixed, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos here, we'll use estimated credit score of 760 and an estimated debt to income ratio of 40. So with these settings, let's check out the rate options today. All right, so with rates going a little bit crazy, I wanted to switch it up a little bit. So these are probably the lowest rates we can offer here. So the best option at the top, 7.125 rate, is a portfolio product, not a Fannie Mae, but it is a Oz product. 2.5 discount points in costs puts our final APR at 7.342. So with rates going crazy the way they are, some of our programs have actually created some portfolio options which can beat out Fannie and Freddie sponsored programs in some cases. Just like today, you see it's right at the top of the list here. So great option for our customers that want to take advantage. Now, if our customer for any reason doesn't qualify using conforming guidelines. Typically, the next option we want to check out is FHA. So we'll set up the same demo here for FHA. Everything else will stay exactly the same. That way we can compare APRs across the programs. FHA does allow a little more leniency on credit events and issues, as well as a much higher debt to income ratio. But we'll keep everything the same so we can compare apples to apples here. So let's check out the lowest FHA options this morning. So it looks like the best option here at the top, 6.625 rate, costing 2.122 discount points, puts our final APR 7.255. So good option here. Right there, a little bit cheaper than the portfolio option and a little bit more cheaper than the Fannie and Freddie options here. So our customers that qualify for both, definitely check out FHA, as we've been saying lately. And for our customers that must use FHA, definitely a pretty great deal they have here now, as long as this APR is considered, because this does include the mortgage insurance. So make sure you always check out the APR on those FHA programs. Now, where we love to specialize is if our customer doesn't qualify for FHA or conventional. Unfortunately, many other banks or lenders have to deny that customer. And that's where we love to say yes, because we have over 5,000 additional programs under expanded guidelines here in order to solve our borrowers' potential issues. So everything else will stay exactly the same, but now we have a new option for our non-QM where we can select different income. So full doc is what we use for conventional and FHA. That's 2 years of tax returns, what most people are used to. So we'll typically choose this option to select a different one, such as asset related, business bank statement, investor programs are only for investment properties. Personal bank statement 12-month is our most popular program by far. We also have RSU, stated, BOE, 1099, P&L, no income, CDFI, all kinds of different options. Most common, though, is the personal bank statement 12-month, and that's for our self-employed borrowers. Many times our self-employed borrowers submit 2 years of tax returns, have different write-offs, and may not qualify at all, or just may not quite get enough income qualification to get the home they really desire. So we'll solve that problem. No tax returns at all, just 12 bank statements, and we'll determine a debt to income ratio of 40% in this example, using just their cash in the bank, no tax returns at all. So most of the times our self-employed borrowers will qualify for double or triple the income and therefore can get the home they really want. So let's check out the bank statement options this morning. All right, best option here, 7.5 rate, 3.375 discount points of cost. So these do have a little bit more cost here. And that puts our final APR at 7.646. So almost identical to conventional. You see they kind of jump around a little bit. I think yesterday we beat conventional by a touch. Today we don't quite beat the portfolio, and we don't quite beat a couple of those conventionals, but we beat quite a bit of them here with a bank statement. So non-QM bank statements, almost identical to conventional at this time. Definitely recommend. If you need a little extra help, check out these options. Notice there's dozens and dozens of different variations of these programs. Some at a little bit higher rates and costs may allow other issues such as bankruptcies and foreclosures and other credit events. So please get with our team. They'll find the best one for you here. Now let's go back and do our couple final demos for investment properties. So we love to do live rates for investments. There are only two options really to compare here. So we'll start with our conforming conventional options, and then we'll check out our expanded guideline options. We'll set up the same scenario, ADLTV, and this time we can set the desired price a little bit higher. We can buy the rate down a little bit more on investment properties. So let's see the lowest options here. Look, again, a little bit different search than we usually do, so we can try to find the lowest rate options rather than necessarily the one discount point cost. Okay. So again, just like the primary, there is a portfolio product that is, the same as conventional. However, it is not Fannie or Freddie, and it is much, much cheaper here. So even for an investment property, 7.25 rate, 3 discount points of cost, a little bit more cost there. The final APR, 7.483. So blowing that out of the water there on all of the other items. Most of the times, these portfolios do not have loan level price adjustments, so they can really beat conventional and the other conventional programs. And most of the times, our investors would like another option, though. So this is a great option, still a little bit costly. I would say there, 3 discount points is pretty costly, $12,000. So many times our investors want to check out some other options to compare. That's where we love to present our non-QM options. So for the final demo, set up investment property, ADLTV, 97 price, and this time we'll choose expanded guidelines, aka non-QM, where we can choose a couple new options here. First off, we must select our income. For an investment property, the most popular option is the DSCR option because it doesn't require any employment or income from our borrower. Simply use the estimated rental income from the property to determine a DSCR ratio, stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows, that's a ratio of 1.0 or higher. We even have options for ratios under 1.0 where the property may not quite cash flow on a monthly basis. For the demo, we always put 1.5, which is the highest value, so we can see all the options pop up. And finally, prepayment penalty is standard. We typically choose 3 years. That is standard for these programs. We can try for 0. That will limit the amount of programs that show up and cost more. And 5 years will save some money, but again, will limit the amount of loan programs. So we always choose 3 years as the most common. So let's check out this scenario here to find the lowest DSCR options. So a little bit different than we usually do. All right, so lowest DSCR option here, reasonable, 7.625 rate, 2.85 discount points in cost, puts our final APR at 7.753. So a little bit cheaper on the buy down there for our compared to our conventional programs. We saw the portfolio program can definitely beat the DSCR, but our DSCR, at least these top 2 options, are definitely able to beat conventional today. So definitely recommend our borrowers out there check out the portfolio option that we have under conventional and also check out the DSCR options that we have. They're both actually beating conventional today. Now, if you scroll down, you'll see we have tons of different options here under DSCR. Some of these at higher rates and costs may allow bankruptcies, foreclosures, credit events, also may allow us to calculate income differently, such as using short-term rental income. And some of these programs may allow special property types, which is our topic for today. So let me bring up our slide again. And our topic for today is manufactured homes. So typically, not able to finance any manufactured home as an investment property with any sort of conventional programs. However, the DSCR programs we just saw, there are a couple options there on that list. Obviously, at higher costs, there is an adjustment when you do manufactured, but some of those options do work for manufactured. So we want to go through today. Jose's obviously probably got some more traditional options, but then we have the outside the box non-QM options, such as I just mentioned, where our DSCR, we can use that for a manufactured home. We don't do that on the live pricer, of course. That would confuse everybody, and it's a little bit hard to get those specialty programs. But Jose has some examples for us today for manufactured homes. So first, as Kyle said, there is a lot of misconceptions here, Jose. So let's first just talk about what it is, what it isn't. We've done these shows a few times. Always good to get the strict definition out. And then let's talk about what we can offer.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you here this morning. So first, I just wanted to talk a little bit about what is a manufactured home so that we don't have any misconceptions about exactly what we're talking about. Manufactured home is not a mobile home. First thing I want to state is that manufactured home is a property that is already, it is a real property, basically. Manufactured home starts as a mobile home when it's at the factory, and then it is trailered to the property, to the location, and then it is permanently affixed to the land. And at the point that it becomes permanently affixed to the land, it then transitions from being a mobile home to real property, real estate, as we're going to call it there, right? At that point, now there are certain items that are required for a manufactured home. When you're doing your deal, you're talking about mainly an affidavit of a fixture, which is what is going to confirm that the property or that the manufactured home is now permanently attached to real estate, and it is now has a folio number. You can look it up in your property tax records, and it's going to show property type manufactured home. It will state that, but it's that's what you need to do there. So very important, because we get a lot of questions from different scenarios, and the first thing that they state is, I got a customer with a mobile home. He wants to get financing. That's a tough question to answer unless we're dealing with the correct nomenclature, right? Are we talking about manufactured home? Or are we talking about a mobile home, which is usually going to be in a mobile home park, and it is going to be paying lot rental for the utilities and for just sitting there and for water, sewer, all that kind of stuff. They pay to the lot. Now that's a mobile home. That's not a manufactured home, because it does not have land associated with it. Manufactured homes are probably one of the hottest trends right now because of their affordability. And there's just more inventory for available right now in the lower price ranges for manufactured homes. In our company, we are disclosing a lot of manufactured home loans. So if you are not up to date on everything that's possible with a manufactured home, you are basically leaving money on the table. So let's get into some of our examples that we have here. Going to give you, our traditional, easy manufactured home with an FHA loan, right? This is going to be one of your better options as far as down payment. However, when you are originating or financing, if you're the borrower, a manufactured home loan, keep in mind that there are a couple of different items to consider that you have to include. One item is going to be a structural engineer's report. They may call it a foundation report, whatever they call it, but it's basically what it is a report that gives an analysis of the foundation. Is it in good condition? Is it permanently affixed? Does it need to get redone? How are the beams under there? All that for an FHA loan, that is a required inspection. For a conventional loan, that is not a required inspection unless it comes up as an issue, and usually that's going to be on the appraisal, right? Appraiser is going to go out there. He's going to look. He's going to look at the property. He's going to look for the HUD decals, which are two plates on either side of the manufactured home. He's going to look for the HUD data plate, which is inside the home, right? If those cannot be located by the appraiser, they're also then the originator will have to order verification letters for the HUD decals and for the data plate. So when you are disclosing your manufactured home loan, it's probably best practices to include those costs just in case the appraiser cannot locate them. And at the same time, the appraiser is going to have to take a photo of the foundation and comment on its condition. And if the appraiser comments that it needs work, looks rusty, looks a little beat up, then the underwriter is going to condition you for that structural engineer's report, at which time you have to immediately request a change of circumstance because that's going to be a $500 to $600 fee. That's the same as the appraiser requesting a CDA or a second appraisal or a reinspection for some damage that has to be repaired. All of those are items which are going to require a change of circumstance. So Let's get into the rates here a little bit. You're looking at here FHA option, which obviously has very good rates here. 7.75 has a little bit of a lender credit there. 0.168 lender credit, and then you can buy that down all the way to 6.875. So this is our FHA option. Now we have an FHA cash out option, 80% LTV on it. So same LTV as you're going to find on regular structure FHA loans. There is not a loan level price adjustment at FHA for the cash out. So you're looking at 7.75 with a little bit of a lender credit there again, and 6.875 as our lowest rate option. Now, our conventional 5% down option, this is with the manufactured home advantage program. That is a conventional program that is for manufactured homes built 1990 and later. So it does have a little bit better pricing, probably like 1 point in cost better pricing than your standard manufactured home loan. Okay, wait a minute. Let's get this right there. And you're looking at 8.25 with a little bit of a lender credit, and then you can buy it down to 7.374. So even though this is a manufactured home advantage, it's preferential pricing, you can still see that FHA is a lower rate than this option and a little bit lower down payment. So now we have our 3% down program for first-time home buyers, Freddie Mac's Choice One program. Now, one thing I'm going to state about this program, real important to note, this first-time home buyer program does not have income restrictions as the Home Ready and Home Possible programs do, where they have to be at an 80% or less of the area median income unless the property is in a low to moderate income census tract or is in a minority census tract where the majority, more than 50% of the census tract is minority. This program does not have that area median income restriction, Freddie Mac Choice One. So you'll note here, and it also has a little bit of a reduced MI. So you'll note here, this program does have a little bit lower rate there. You're looking at 8.124 is at par, and you can buy it down to 7.374. And let's compare the costs. Yeah, it's a little bit lower in both cases. They're $594 lower in the lowest cost option, and roughly the same lower in the lowest rate option. So this is our 3% down purchase, which is amazing for a manufactured home on a conventional loan. Keep in mind out there, when you are shopping around, when you are pre-approving your borrowers who are shopping around, should I say, keep in mind that sometimes the difference between their getting that contract is having a conventional financed offer versus an FHA financed offer. Unfortunately, some listing agents out there, do prefer one over the other and convince their sellers accordingly. So it's always good to pre-qualify, or pre-approve, should I say, to pre-approve your borrowers for both options in case, and give them 2 pre-approval letters if possible, unless they have credit issues that doesn't allow them, or money issues that doesn't allow them to go the conventional route. Always smart to pre-approve them for conventional and FHA. So now we're going to mix it up here in our last 2 options. Here we have non-QM, right? So now we're going to the non-QM world. This is our full doc option. Maximum LTV on this is 80%. So we are looking at a minimum 20% down here, and we're looking at 9.125% as our lowest cost option, and you can buy that down to 8.125%. Now, before I show my last option, which is DSCR, I do want to state I don't have a bank statement option for you here, but I do know for a fact that because we just disclosed one yesterday, that the bank statement option for this same product is going to have the same LTV. The only difference there is going to be the point, quarter point on the cost. And now, last but not least, our DSCR option, right? So this is our DSCR option. Our loan amount here is $350,000. So we are at a 70% LTV, which is our maximum LTV for the DSCR manufactured home option. So yes, you heard me correct. This is the dream for your investors that want to get that very high DSCR, because as you know, there's not much of a difference in the cost for rent for a 3-bedroom, 2-bath, standard manufactured home, and a 3-bedroom, 2-bath standard site-built home that has the same square footage. They're usually going to rent very close in price. However, the cost of the two could be much different, resulting in a much better rate of return on the manufactured home than on the site-built home. But obviously, that comes at a price of more down payment and also a higher interest rate, because you're talking about 10.49 as our lowest cost option. And then you can buy that down all the way to 9.125 at a cost of 2.85 points. So I saved the best for last for you all. So gave you a whole slew of options there, from FHA and conventional, first-time home buyer, cash out, and non-QM full doc, and DSCR.
All right, great. I don't see any questions here, so I think we can go ahead and wrap it up. Remember, we do this show 11 a.m. Eastern every single weekday, where we go through the live rates and then do a deep dive into a different topic. So we'll be back here tomorrow with a new topic to get into, and we'll check the rates out tomorrow. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. We will see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thank you, everybody.
Thanks, everybody.